Welcome back to Teshkid FX for another Hbar price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Hbar chart, which at the time of this recording has continued to hold above a key area of support at around the $0.0639 mark. We are also trading above the 20-day MA here on the daily chart. We have also continued to obey the Elliot structures, and before I give you my next price targets here on the Hbar chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the daily chart, where you can see that Hbar from these low prices that we had been trading within, we saw a very nice bounce to the upside, obeying the Elliot structures and making it to an all-time high at around the $0.58 mark in what I'm terming as that first wave to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing lower prices in this ABC corrective structure, which has now given us a low at around the $0.0356 mark in what I'm terming as the second wave to the lower side. And after seeing the low for that second wave, whatever we expect next is a bounce to the upside in the formation of this wave 3, and this is what I'm expecting on the long-term scenarios. And here on the daily chart, I also have a target area to the upside in the formation of that wave 3 at the fib level 1.618, and that lies at around the $0.9768 mark, and that is the minimum that I'm expecting Hbar to do on the long-term scenarios. And jumping to the daily charts to give you the short-term scenarios that I'm expecting to play out, and also my next price target here on the Hbar chart, you can see that after making our low at around the $0.0356 mark, we started a very nice bounce to the upside, obeying the Elliot structures, where you can see I'm terming that as the first wave. Then we have seen a retracement in the formation of that wave 2 before we started this bounce to the upside in the formation of that wave 3, which gave us a peak at around the $0.0808 mark. And after seeing the high for that wave 3, whatever we expected next is a corrective structure in the formation of that wave 4, and using the Fibonacci's, connecting them from the low of the second wave to the high for that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, and you can see we retraced back into that red target area. And after seeing the low for that fourth wave, we have started this bounce to the upside in what I'm terming as the formation of this wave 5. And here on the 1 hour chart, you can see that at the time of this recording, we are holding below the 20-day MA, which is now acting as resistance. And for us to fully maximize our target areas to the upside in the formation of this wave 5, we need to get above the 20-day MA. And once you get above the 20-day MA, that could trigger an even more impulsive move to the upside, give us a break above the wave 3 high at around the $0.0808 mark. And once that happens, then we can continue pushing even higher, fully maximizing our target areas in the formation of that wave 5, and sketching out my minimum target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high for that wave 3. That gives me a minimum target area in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.087 mark, and that is the minimum that I'm expecting that wave 5 to the upside to do. And we also have the risk of making one more new low in the formation of this wave 4, since we are trading below the 20-day MA, which is now acting as resistance. And there are chances that in case we continue seeing lower prices, there are chances of getting to this support zone at around the $0.0668 mark. And in case we lose that support zone, then there are chances of getting back into this red target area once more, fully maximize it, and also make the low for that fourth wave. And once that happens, then we can expect an explosive move to the upside in the formation of this wave 5. But we also need to have in mind that there are chances that we might have seen the low for that fourth wave, and whatever we are seeing over here is just a consolidation before we see the breakout to give us a break above the wave 3 high at around the $0.0808 mark. And once that happens, then we can fully maximize our target areas to the upside in the formation of this wave 5. And once that happens, then I'll be naming this 5-wave structure to the upside as a larger Elliot wave count 1. And once the wave 1 higher Elliot wave count 1 is in, then we can expect a corrective structure in the formation of a larger Elliot wave count 2, and once the wave 2 is in, then we can expect another explosive move to the upside in the formation of that larger Elliot wave count 3. And also taking a look at the indicators here on the RSI, we are trading at around the 41 mark, meaning we have massive room for us to support both movements to the upper side and also to the lower side. And also taking a look at the MACD, we have been able to print a bearish cross, which is fully supporting lower prices here on the Hbar chart, and that means there are chances of seeing a bit of a short-term bearish movement here on the charts, maybe fully maximize our red target area, or maybe see just a move back to the key area of support at around the $0.0668 mark. And once we find support at that support zone, then we can expect that massive bounce to the upside, fully maximizing our target areas in the formation of that wave 5. So that is what I'm expecting on the short-term scenarios and also on the long-term scenarios, and I'll be keeping you updated.